Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 5, that is Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. This is lecture number 8. Let us continue. So, this is lecture number 8, Accounting for Depreciation. Let us begin with illustration 1. Let us begin with illustration 1. Jan Brothers acquired a machinery on 1st July 2015, a cost of 14 lakhs, and spent 1 lakh on the installation. So this installation charges will be capitalized on the value of machinery. The firm writes off depreciation at 10% per annum of the original cost every year. Original cost method, that means straight line value method. The books are closed on 31st December every year. The books are closed on 31st December every year. What is required in the question? Show the machinery account and depreciation account for 2 years, that is 2015 and 2016. I believe you understood the question. Let us try to make machinery account for these 2 years first. Solution. Solution. Machinery account. Machinery account. Let us make this format. Draw this format. Date, particulars, amount, date, particulars, amount, date, particulars, amount, that is rupees, date, particulars, amount, that is rupees. Let us do the accounting for 2015 first. So date 2015. The machinery is purchased on 1st July 2015. 1st July 2015 to bank account. The machinery is purchased for 14 lakhs. The machinery is purchased for 14 lakhs on the same date, that is 1st July 2015. The installation charges of 1 lakh incurred. Installation charges of 1 lakh. Understood? Fine. Let us do the depreciation. So December 31, 2015 by depreciation. Now depreciation is to be calculated at the rate of 10% using straight line value method. So over here in this question, the depreciation is to be calculated on 15 lakhs. 15 lakhs multiplied by 10%. 15 lakh multiplied by 10% for the whole year. So depreciation needs to be calculated at the rate of 10%. So 14 lakhs multiplied by 10% for 6 months, that is 6 by 12. Do it on your calculators. 14 lakh multiplied by 10% for 6 months. Okay, we have not added this 1 lakh over here. So it won't be 14 lakh, it would be 15 lakhs. Kindly rectify this. This would be 15 lakhs for 10% for 6 by 12. So this would be 75,000. This would be 75,000. Let us do the totals first. So total is 15 lakhs. On the credit side, 15 lakhs minus 75,000 is 14 lakh 25,000. 15 lakh minus 75,000 is 14 lakh 25,000. By balance carried down. By balance carried down. I believe you understood this. I believe you understood this. Let us continue. Brought down 14 lakh 25,000 as a balance over here for 2016. For 2016, the date would be 1st January 2016. To balance brought down. To balance brought down 14 lakh 25,000. To balance brought down 14 lakh 25,000. Now 31st December we need to calculate depreciation. So by depreciation account on 15 lakhs multiplied by 10% for the whole year. So 15 lakhs multiplied by 10 by 100 multiplied by 12 by 12. The depreciation would be 1,50,000. The depreciation would be 1,50,000. Stretch these lines a bit. Kindly stretch these lines a bit. Now just do the totals over here. So totals is 14 lakh 25,000 is the total. 14 lakh 25,000 is the total. 14 lakh 25,000 minus 1 lakh 50,000. 14 lakh 25,000 minus 1 lakh 50,000. 12 lakh 75,000. 12 lakh 75,000 by balance carried down. By balance carried down. By balance carried down. Okay, so we are done with the machinery account. Let us make depreciation account now. Depreciation account. Give heading depreciation account. Give heading depreciation account. Let us draw the format first. Draw the format first. Date particulars amount. Date particulars amount. Date particulars amount. Debit credit. Date particulars amount. Date particulars amount. 2015. 2015. 31st of December 2015 to machinery account. We will charge depreciation to machinery account 75,000. From where this 75,000 came? From here, just see it over here. Credit side of machinery account 75,000. So 75,000. Close this. Over here, this 75,000 should be transferred to profit and loss account. On the same day, that is 31st of December, on the same day, that is 31st of December, this 75,000 should be transferred to profit and loss account. So by profit and loss account, we have closed for 2015. For 2016, for 2016, 31st December 2016 to machinery account, to machinery account 1,50,000. We charge depreciation for the whole year. On the same day, 31st December, transfer this amount of 1,50,000 to profit and loss account. So by profit and loss account, 1,50,000 we closed for this year. Close the account. Close the account. So we have completed with depreciation account, and also we are completed with machinery account. So illustration number 1 is completed. Illustration number 1 is completed. Now let us move ahead and solve illustration number 2. Illustration 2. This illustration is based on the diminishing balance method. This illustration is based on the diminishing balance method. So over here, Jan Brothers acquired a machinery on 1st July 2015 at a cost of 14 lakhs and spent 1 lakh on the installation. The firm writes off depreciation at the rate 10% per annum every year. The books are closed on 31st December every year. That means accounting period is 1st of January to 1st of January to 31st of December every year. 31st of December every year. I believe you understood. Required, show the machinery account on diminishing balance method. Show the machinery account on diminishing balance method for the year 2015 and 16. I believe it is clear to all of you. Let us continue now. Let us try to draw the machinery account. Let us try to draw the machinery account quickly. So we are drawing machinery account. Right, solution. Right, solution. Machinery account. Machinery account. Draw the format of machinery account. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Debit, credit. So this is machinery account. Focus on 2015 first. 2015. We have purchased the machinery on 1st July. So to bank account, purchased for 14 lakhs, purchased for 14 lakhs. 1 lakh incurred on the installation. So 2, bank account. The installation is to be capitalized. Installation charges. Installation charges. Date would be same, 1st July. Let's do the quickly totals. Total says 15 lakhs. Total says 15 lakhs. On the last day, that is 31st December 2015, depreciation needs to be charged. So by depreciation account, 15 lakhs multiplied by 10%, which is given in the question, rate 6 by 12. 6 by 12 from 1st July 2015 to 31st December 2015, for 6 months, it is 75,000. So 15 lakh minus 75,000 is 14 lakh 25,000. 14 lakh 25,000. This is by balance carried down. By balance carried down. We are done with 2015. Let's draw the account for 2016. Let's draw the account for 2016. Let's draw the account for 2016. Over here, the opening balance will be 14 lakh 25,000, which is the closing balance of last year 2015. Over here, January 1st, 2016, to balance brought down. To balance brought down. 14 lakh 25,000 to balance brought down. Let us do the totals over here. Let us do the totals over here. On the last day, that is 31st December, the depreciation needs to be charged. So we'll write by depreciation, by depreciations. Now we need to charge depreciation on the reduced value, written down value, that is 14 lakh 25,000 multiplied by 10%, multiplied by 12 by 12 for the whole year. So this would be 142,500, 142,500, which is 10%. Let's do the total over here. 14 lakh 25,000. 14 lakh 25,000 minus 1 lakh 42,500. 1 lakh 42,500. Do it on your calculators and try to calculate the closing figure. By balance carried down. By balance carried down. That is the closing figure. Let us try to calculate on your calculators. So it is 12 lakh 82,500. It is 12 lakh 82,500. I believe it is clear to all of you. 12 lakh 82,500. I believe it is clear to all of you. So we have completed illustration 2, that is we had made machinery account. If you ask me that how we could draw depreciation account also, so basically these two figures, the depreciation amount figure, that is 75,000 as and 1,42,500, needs to be transferred to profit and loss account at the year end. Just do it quickly. Depreciation account. Depreciation. Depreciation account. Depreciation account. The format would be same format, date, particulars, amount, date, particulars amount, debit, credit, date, particulars, particulars amount, that is rupees, date, particulars amount, that is rupees. First of all, do it for 2015. 2015. 31st December to machinery account. To machinery account. 75,000. Transfer this 75,000 to profit and loss account on the same day. So 75,000 over here. The date would be 31st December by profit and loss account. By profit and loss account. Do it for 2016 now. For 2016, 1,42,500. 1,42,500. The date would be 31st December only. 31st December to machinery account. To machinery account 1,42,500, on the credit side 1,42,500, on the credit side 1,42,500, and this would be 31st December to machinery account. To machinery account. I believe you understood how to draw depreciation account, how to make depreciation account. Let us continue now. Let us move ahead now. The third method is sum of years of digit method. The third method that we are going to learn is sum of years of digit method. What is there in this method and how it is significant, how to do the calculations, we are going to learn in this topic. So let us quickly learn about sum of years digit method. It is variation of reducing balance method. In this case, the annual depreciation is calculated. The annual depreciation is calculated by multiplying the original cost. Mark my words, multiplying the original cost of the asset less its estimated scrap value by the fraction represented by the number of years including the present year of remaining life of the asset oblique divided by total of all digits of the life of an asset in year. The number of years of remaining life of assets divided by total of all the digits of the life of the assets in years. Suppose the estimated life of the assets is 10 years. The total of all the digit from 1 to 10, that is 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 plus 9 plus 10 equals to 55. The sum of 1 to 10 is 55, or by the formula you can also do this as n under bracket n plus 1 divided by 2. So 10 multiplied by 11 by 2, which is 55. You do it by this manner, this would be easier. The depreciation to be written off in the first year will be 10 by 55. The depreciation will be written off in the first year will be 10 by 55. The, the cost of the asset less estimated scrap value and the depreciation of the second year will be 9 by 55. The depreciation for the third year will be 8 by 55. The depreciation for the fourth year will be 7 by 55. The depreciation for fifth year will be 6 by 55. The depreciation for the uh, sixth year will be 6 by 55. The depreciation for 7th year will be 4 by 55. The depreciation for 8th year will be 3 by 55. The depreciation for 9th year will be 2 by 55. And finally, the depreciation for 10th year will be 1 by 55. This method is not yet in vogue, and its advantages are same as of the reducing balance method or diminishing balance method, written down value method, that means. Understood? Let us continue. Let us continue. Just write this over here. Sum of years, sum of years digit method, sum of years digit method is is one of the accelerating method, one of the accelerating method, one of the accelerating method of depreciation, method of depreciation, which depreciates the which depreciates the which depreciates the asset at which depreciates the asset at higher rate at higher rate in the earlier years in the earlier years in the earlier years and at lower rate in the later years in the later years. I believe you understood this. That means, in short, we can say that depreciation amount depreciation amount depreciation amount reduces reduces each year depreciation amount reduces each year. Let us do one example. Let us do one example. Right, example. Right, example. Cost equals 2 lakh. Scrap value. Scrap value equals 20,000. Scrap value equals 20,000. Estimated life. Estimated life equals 5 years. Estimated life equals 5 years. I believe you understood till here. So, first year, it would be 5 plus for second year, it would be 4 plus third year, it would be 3. Third year, it would be 3. For fourth year, it would be 4. 5, 4, 3, 2. And for fifth year, it would be 1. For fifth year, it would be 1. The sum total of all these numbers is 15. That is 5 plus 4 plus 3 plus 2 plus 1 equals to 15. Equals to 15. Let's calculate the depreciation for first year. Depreciation for first year. So first year depreciation equals 5 by 15. The first year depreciation equals 5 by 15 multiplied by original cost minus scrap value. Original cost minus scrap value, residual value. Kindly calculate it fast. So 5 divided by 15 multiplied by original cost, which is 2 lakhs. Original cost, which is 2 lakhs, and scrap value is 20,000. Just see the question once again. Cost is 2 lakh and scrap value is 20,000, that is given over here. This means 5 by 15 multiplied by 1,80,000, 1,80,000, and it would be 1 by 3. It would be 1 by 3. So this would be 60,000. This would be 60,000. First year depreciation is 60,000. Let us calculate second year depreciation. Let us calculate second year depreciation. Depreciation for second year. So this would be 4 by 15 multiplied by original cost minus scrap value. Original cost minus scrap value. So 4 by 15 multiplied by 2 lakh minus scrap value is 20,000. So 4 by 15 multiplied by 1,80,000. 4 by 15 multiplied by 1,80,000. Solve it on your calculators quickly. Solve it on your calculators quickly. 4 by 15 multiplied by 1,80,000. The answer is 48,000. 48,000. Let us calculate the depreciation for third year. Let us calculate the depreciation for third year. So third year depreciation equals to third year depreciation equals to third year depreciation equal to 3 by 15. 3 by 15 multiplied by original cost minus scrap value. Original cost minus scrap value. So this would be 3 by 15 multiplied by 2 lakh minus 20,000. So this is 1 by 5 multiplied by 1,80,000. 1 by 5 multiplied by 1,80,000. Do it on your calculators. 1 by 5 multiplied by 1,80,000. This is 36,000. This is 36,000. Let us calculate for the fourth year. So fourth year depreciation will be, let us calculate for the fourth year now. So write over here fourth year depreciation. Fourth year depreciation. Fourth year depreciation equals, fourth year depreciation equals 2 by 15 multiplied by original cost minus scrap value. 2 by 15 multiplied by original cost minus scrap value. So 2 by 15 multiplied by 2 lakhs minus 20,000. So 2 by 15 multiplied by 1,80,000. Do it on your calculators. 2 by 15 multiplied by 1,80,000, which comes to 24,000. Which comes to 24,000. Kindly check it once again. 1,80,000 multiplied by 2 divide by 15, which is 24,000. I believe it is clear. Now calculate the depreciation for the fifth year. Calculate the depreciation for the fifth year. So fifth year depreciation. So fifth year depreciation equals fifth year depreciation equals 1 by 15 multiplied by original cost multiplied by original cost minus scrap value. So over here 1 by 15 multiplied by 2 lakhs minus 20,000. So 1 by 15 multiplied by 1,80,000, that comes to 1,80,000 multiplied by 1 by 15, which comes to 12,000, which comes to 12,000. So depreciation for the fifth year is 12,000. I believe it is clear. I believe it is clear. Let us continue with another example. Kindly write example. Kindly write the next example. Cost equals 1 lakh. Scrap value equals 30,000. Estimated life equals 7 years. Estimated life equals 7 years. Calculate calculate depreciation for calculate depreciation for third year. Calculate depreciation for third year by sum of years of digit method. I believe it is clear to all of you. I believe it is clear. Quickly do it. So it is 7 years, my dear students. Solution. 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1 equals 28. Equals 28. Kindly write with me. Depreciation for year 3, that is third year, equals first, second, third. 5 by 28 multiplied by original cost minus scrap value. Quickly do it. Quickly do it. So it would be 5 by 28 multiplied by original cost is 1 lakh. Scrap value is 30,000. See it once again. Original cost is 1 lakh. Scrap value is 30,000, that is 70,000. So 5 by 28 multiplied by 70,000. Do it on your calculators. 5 by 28 multiplied by 70,000. 12,500. The answer is 12,500. So depreciation for the third year is 12,500. I believe it is clear. I believe it is clear. Let us continue. Write example. Write example. Cost equals 1 lakh. Scrap value Scrap value is 4,000. Estimated life. Estimated life equals 8 years. Calculate calculate the value of calculate the value of depreciation. Calculate the value of depreciation for fourth year by sum of years of digit method. Sum of years of digit method. I believe it is clear. I believe it is clear. Right, solution. Right, solution. 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1 equals 36. Equals 36. We need to calculate depreciation for fourth year. So write depreciation for fourth year equals 1, 2, 3, 4, that is 5. So 5 by 36 multiplied by original cost minus residual value, that is scrap value, which is given in the question, 4,000. Right, 5 by 36. 5 by 36 multiplied by original cost 1 lakh minus scrap value 4,000 equals 5 by 36 multiplied by 96,000. 5 by 36 multiplied by 96,000. Kindly solve it on your calculators. 5 by 36 multiplied by 96,000. Kindly do it on your calculators. What we get is 13,333. What we get is 13,333. I believe you understood. I believe you understood till here. I believe you must have understood till here. Let us move ahead. Let us move ahead now. पता है क्या होगा? Let us move ahead and solve illustration 3 now. Illustration 3. Messrs. Akash purchased a machine for rupee 10 lakh. Estimated useful life and scrap value. So estimated useful life is 10 years and scrap value is 1,20,000 respectively. The machine was put to use on 1st of January 2010. The machine was put to use on 1st of January 2010. Let us calculate 10 years. So basically what we need to do is 10 plus 9 plus 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1 equals 55. So let's do it. Solution. Solution. 10 plus 9 plus 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1 equals 55. Equals 55. What we need to show machinery account and depreciation account in their books for 2015. For 2015, we need to calculate for 2015. So depreciation for 2015. So over here, right now 2010 is there, 2011, 12, 13, 14, and 15. So we need to make a total of all this. We need to make a total of all this. 10 plus 9 plus 8 plus 7 plus 6, which is which comes to 40. So 40 by 55 multiplied by 40 by 55 multiplied by original cost minus scrap value, original cost minus scrap value. So 40 by 55 multiplied by, what is the original cost? 10 lakhs. 10 lakhs minus scrap value is 1,20,000. So 40 by 55 multiplied by 8,80,000. Now quickly solve it on your calculators. 8,80,000 multiplied by 40 by 55. Quickly, which is 6,40,000. Which is 6,40,000. What we have calculated is the total of sum of digit of depreciation for 5 years, that is 2010 to 2014. Just write over here, total of total of depreciation total of depreciation for 2010 to 2014, which is 6,40,000. Now calculate written down value written down value as on written down value as on 1st January 2015. So till 2014 and it is 6,40,000. So it is 10 lakh original cost minus end of 2014 6,40,000. So 3,60,000. So 3,60,000 is for 2015. Let us calculate the depreciation for 2015 now. Kindly write depreciation depreciation for year 2015. Depreciation for year 2015. 5 by 15 multiplied by original cost multiplied by original cost minus scrap value minus scrap value. So original cost is 10 lakhs. Right. 5 by, it's not 5 by 15, it's 5 by 55. So 5 by 55, 5 by 55 multiplied by 10 lakhs minus scrap value, that is 1,20,000. So that is 1 by 11 multiplied by 8,80,000. 8,80,000. So 1 by 11 multiplied by 8,80,000 is, quickly do it on your calculators, 8,80,000 multiplied by 1 by 11, which is 80,000, which is 80,000. So this is depreciation for year 2015. Kindly write depreciation for year 2015, 80,000. I believe you understood. I believe you understood till here. I believe you understood. Let's make machinery account now in the books of Akash. In the books of Akash. In the books of Akash. In the books of Akash, machinery account. Machinery account. Let us draw the format of machinery account. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Debit, credit. Let's do it for the year 2015 first. Both the column of date, which is debit and credit column, write 2015. January 1st. January 1st to balance brought down. To balance brought down. Students, you had calculated for 2015, the value is 3,60,000. The value is 3,60,000 for 2015. So what we will be doing over here is we will be writing for 2015 the opening balance, that is the opening balance, opening value to balance brought down is 3,60,000. 3,60,000. Close it for 3,60,000. 3,60,000. Depreciation December 31. On the last day, we need to charge depreciation. So by depreciation account, we have calculated the depreciation for 2015, which is 80,000. We have calculated the depreciation for 2015, year 2015, which is 80,000. So we'll write 80,000 over here. So 3,60,000 minus 80,000 is 2,80,000. 2,80,000 by balance carried down. By balance carried down 2,80,000. Over here, 2,80,000 will be the opening balance for next year, for 2016. January 1, 1st January, to balance brought down. To balance brought down 2,80,000. I believe you understood till here. I believe you understood till here. Let us make depreciation account now. Depreciation account. We need to make only for a single year, that is 2015. 2015. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Debit, credit. For 2015 both the sides, for 2015 on both the sides, ending date December 31 to machinery, ending date December 31 to machinery 80,000, 80,000, and over here this 80,000 will be transferred to profit and loss account on the same date, that is December 31, by profit and loss account 80,000, by profit and loss account 80,000. I believe you understood. I believe you understood this. Let us move ahead. Let us move ahead. Write an illustration. Write an illustration. On 1st April 2014, on 1st April 2014, A Limited, A Limited purchased, A Limited purchased a machinery, a machinery for for rupee 2 lakhs, for rupee 2 lakhs, and incurred rupee 14,000, and incurred rupee 14,000 towards freight and insurance, towards freight and insurance. They incurred rupee 2,000 towards towards carriage inwards, towards carriage inwards, and rupee 4,000 towards installation charges, towards installation charges, towards installation charges. I believe it is clear till here. I believe it is clear till here. It was established, it was established that the machinery, it was established that the will have machinery will have a scrap value, will have a scrap value of rupee 20,000, of rupee 20,000 at the end of at the end of its useful life, at the end of its useful life, its useful life, which is 4 years, which is 4 years. On 1st April 2017, on 1st April 2017, rupee 4,000, rupee 4,000 were incurred, rupee 4,000 were incurred on repairs, on repairs and renewals of machine, repairs and renewal of machine required, required, determine, determine A, Rate of depreciation, determine A. Rate of depreciation, B. Amount of depreciation, amount of depreciation, C. Show the machinery account, show the machinery account for the first 4 years, for the first 4 years ending on 31st March, ending on 31st March every year, every year, according to, according to sum of years digit method, years digit method. I believe you understood. Please refer the question once again. On 1st April 2014, A Limited purchased a machinery for rupee 2 lakh and incurred rupee 40,000, 14,000 towards freight and insurance, rupee 2,000 incurred towards carriage, and 4,000 incurred toward installation charges. It was established that the machinery will have a scrap value of 20,000 at the end of useful life, which is 4 years. On 1st April 2017, 4,000 were incurred on repairs and renewal of the machine. Rate of depreciation is to be required. Amount of depreciation is to be required. We need to show the machinery account for the year 4, for the first 4 years ending on 31st March every year, according to sum of years digit method, according to sum of years digit method. Let us try to solve this. Let us try to solve this. Solution. Solution A. Let us calculate rate of depreciation. Let us calculate rate of depreciation. Number of years life remaining divided by sum of years digit, sum of year digits multiplied by 100, multiplied by 100. We need to calculate sum of years digit first. Sum of year digit, sum of year digit. The formula is n plus 1 by 2. N, that number of year is 4, 4 plus 1 is 5 by 2. So 4 multiplied by 5 by 2, 4 multiplied 5 by 4 multiplied by 5 is 20. So 20 by 2, 20 by 2 equals 10. Sum of years digit is 10. Sum of year digit is 10. Now calculate it for the first year, because first 4 years is required in the question. So first year 4 by 10, 4 by 10 multiplied by 100, which is 40%. Second year, calculate for second year, 3 by 10 multiplied by 100, which is 30% calculated for third year, which is 2 by 10 multiplied by 100, which is 20%, calculated for the fourth year, which is 1 by 10 multiplied by 100, that is 10%. That is 10%. I believe you understood this. Let us calculate the amount of depreciation now. Calculation of B. Calculation of the amount of depreciation per annum equals number of years life remaining, number of years life remaining divided by sum of years digits, sum of years digits multiplied by original cost, multiplied by original cost minus scrap value, minus scrap value. Let us calculate it. Let us calculate it by using this formula. Over here, mention year, rate of depreciation that we have already calculated, original cost less scrap value, less scrap value, and at last the amount of depreciation. At last we will calculate the amount of depreciation, the amount of depreciation. What is the original cost? It is given in the question. It is given in the question. It is given in the question 2 lakhs plus 7,000 will be added, plus 7,000 will be added. So 2 lakh plus 14,000 will be added, not 7,000 will be added. So 2 lakh plus this 14,000 will be added, 2,000 will be added, and 4,000 will be added. And scrap value is 20,000, which is deducted. So just write here 2 lakh plus 14,000 plus 2,000 plus 4,000 minus scrap value is 20,000, minus scrap value, that is 20,000. If you solve this, the value is 2 lakh. If you solve this, the value is 2 lakhs. Let us calculate for 2014 now. So year is 2014. The rate of depreciation for first year is 40%. Original cost minus scrap value is 2 lakh. Amount of depreciation is 40% of 2 lakh. 40% of 2 lakh, which is 80,000. Which is 80,000. I believe it is fine. Let us calculate for 2015. 30%, 2 lakhs, 30% of 2 lakh, 30% of 2 lakh, which is 60,000, which is 60,000. Let us do it for 2016. For 2016, 2 lakhs, and 20% of 2 lakhs, 20% of 2 lakhs, which is 40,000, which is 40,000. 2017, 10%, 10% of 2 lakhs, 10% of 2 lakhs, which is 20,000, which is 20,000. I believe the amount of depreciation is clear to all of you. I believe the amount of depreciation is clear to all of you. Let us make machinery account now. Let us make machinery account now. Kindly give heading machinery account. Kindly give heading machinery account. Date, particulars, amount, date, particulars, amount, debit, credit, date, particulars, amount, amount in rupees. Over here, date, particulars, amount in rupees, amount in rupees. Let us begin. On 1st of April 2014, machinery is purchased for 2 lakh. So to bank account 2 lakh, to bank account 2 lakh, 14,000 is carriage inward. So to bank account 14,000, 2,000 is incurred towards, 14,000 is freight and insurance, 2,000 is carriage inward. So 2,000, and 4,000 is incurred towards installation charges. 4,000 is incurred towards installation charges. So 4,000, total is 2,20,000. Total is 2,20,000. Let us calculate the depreciation. 31st of March 2015 by depreciation account. By depreciation account, 80,000, 80,000. By balance carried down, 2,20,000 minus 80,000, 1,40,000, 1,40,000. We have accounted for 2014. Let's account for 2015 now. 2015 now. Year 2015. 1st of April 2015, to balance brought down, to balance brought down 1,40,000, 1,40,000, 31st March 2016, we need to calculate the depreciation. So by depreciation 60,000, by depreciation 60,000, by balance carried down, by balance carried down. So 1,40,000, that is the total. 1,40,000, that is the total, minus 60,000, minus 60,000. Balance carried down, the closing balance is 80,000. Balance carried down, the closing balance is 80,000. Let's account for 2016. Let's account for 2016. 1st of April 2016, to balance brought down, to balance brought down 80,000. 31st of March 2017, by depreciation, by depreciation, that is 40,000. This we have already calculated. Total, total is 80,000. Total is 80,000. Let us find the closing figure. 80,000 minus 40,000 is 40,000. 80,000 minus 40,000 is 40,000. We will write by balance carried down. We will write by balance carried down. Let us stretch these lines. We need to do the accounting for the 4th year. We need to do the accounting for the 4th year, that is 2017. This 40,000 will come over here as opening balance. This is 2017. 1st of April 2017, to balance brought down 40,000, to balance brought down 40,000, to balance brought down 40,000. Make total over here 40,000. Transfer the total in the credit side, 40,000. We need to calculate depreciation. We need to account for depreciation on 31st of March 2018. By depreciation, by depreciation 20,000. This we have already calculated above in B. So 20,000 by depreciation, by balance carried down 20,000. By balance carried down is 20,000. So we had made machinery account over here. We had made machinery account over here. Let us see what we have learnt in today's class. Let us see what we have learnt in today's class. So we have begun with the illustration. That illustration talked about straight line value method. We have solved it properly. In that we have made machinery account and depreciation account as per straight line value method. Then we have solved illustration 2, where we have solved this sum in relation to Jain brothers. Over here we have drawn machinery account and depreciation account, but the method that we have followed was written down value method or reducing balance method. Then we have begun with a new method today, that was sum of years of digit method, a quite interesting method. We have learned how to calculate the depreciation rate and how to calculate the depreciation amount using sum of years digit method. We have done several examples in relation to sum of years digit method. Then we have done illustration 3 on sum of years digit method. We have drawn machinery account and depreciation account using sum of years digit method. And at last we have done a huge sum on the basis of sum of years digit method. We have calculated the rate of depreciation, the amount of depreciation, and also we have made the machinery account. And also we have made the machinery account in this sum. I believe you are quite clear till here. Let us wind up now. Let us wind up this class. Thank you. Thank you.